After 2 weeks of consolidation in a tight trading band, Bitcoin BTC has decisively broken out, eclipsing its previous all-time high and charging toward fresh peaks. The recent surge to $118,000 has not only validated the bullish thesis, but also reignited investor confidence across markets. With the Crypto Fear and Greed Index climbing 5 points to 71/100ths, matching levels seen a month ago, the mood has shifted from caution back to controlled exuberance. Yet, for those tracking the next landmark target, $133,000, the alignment of technical patterns, institutional demand, and macro catalysts paints a compelling picture of why Bitcoin's climb may only just be beginning. Sentiment indicators offer a real-time snapshot of market psychology. As BTC pierced its former all-time high, the Fear and Greed Index, a composite of volatility, momentum, social media activity, and surveys jumped from 66 to 71. This signals that investors, previously wary after May-June turbulence, are now increasingly confident in the bullish trend. By contrast, the altcoin season index on CoinMarketCap languished at 26/100ths, underscoring Bitcoin's recaptured dominance. When that index falls below 30, it indicates that altcoins are underperforming. Compared to Bitcoin, this dynamic typically occurs at the start of major BTC rallies as capital flows back into the largest, most liquid crypto asset before radiating outward to smaller cap tokens. Bitcoin's price action since late May carved a clear downtrend, visible on daily and weekly charts as lower highs and lower lows. However, in early July, buyers reclaimed control. BTC not only pierced the downtrend line, but also formed a textbook cup and handle on the daily chart cup formation, a rounded base from mid-May's low near $96,000 to the retest of $115,000 in late June, handle a slight consolidation and pullback into early July, culminating in a tight range just below $115,000. Breakout, a breakout candle on July 7th, sweeping through $118,000 resistance on sharply increased volume. Trader Matthew Highland aptly summarized, "Buyers are in control and gearing up for a new growth phase." This breakout invalidates the prior bearish structure and sets the stage for the next measured move, typically. The depth of the cup added to the breakout point yields a target near $145,000. Even conservatively, it suggests strong upside toward $133,000 in the coming months, while retail speculation ignites short-term rallies. Institutional flows provide the foundation for sustained uptrends. According to eToro analyst Josh Gilbert, this cycle marks the first major uptrend driven primarily by organizations rather than day traders. During July, U.S. spot Bitcoin ETFs absorbed over $1.04 billion of net inflow testament to deep-pocketed managers allocating to BTC as part of diversified portfolios. Yet Gilbert emphasizes that who is buying matters as much as how much. Pension funds, endowments, and corporate treasuries now hold strategic positions in Bitcoin, creating a liquidity sink that absorbs sell-side pressure and underpins higher prices. Rapid price advances often expose leveraged short positions. CoinGlass reports that roughly $217 million in Bitcoin shorts were liquidated over 24 hours as price broke through $118,000, with a further $1.6 billion wiped out. During the broader July rally, these forced buybacks have a twofold effect. They fuel the breakout itself and deter future bearish bets near key resistance levels, with many traders caught off guard by the strength of the move. Subsequent short sellers will be more cautious, reducing net short interest and creating a self-reinforcing pattern of fewer sell orders at elevated prices. A pivotal macro event looms on. July 15th, the release of the U.S. Consumer Price Index CPI for June. Economists forecast a moderate reading, potentially reinforcing the view that inflation is cooling. A softer CPI often prompts markets to price in a more dovish Federal Reserve stance, lowering real rates and directing capital toward risk assets like Bitcoin simultaneously. Crypto Week in Washington, D.C. scheduled mid-July promises to bring clarity on pending legislation such as the Genius Act, Clarity Act, and anti-CBDC surveillance state measures. Favorable regulatory developments would further embolden institutional allocations, making regulatory tailwinds an additional propellant for the BTC uptrend. On-chain data offers irrefutable insights into market health. Since BTC reclaimed $100,000, on May 8th, the 30-day exchange inflow-outflow ratio has plunged to 0.9, the lowest since December 2022's bottom. This ratio measures the volume of BTC leaving exchanges versus entering. A reading below 1 signifies net withdrawals, highlighting that holders are moving coins into cold storage rather than selling on exchanges. This dynamic closely mirrored December 2022, when BTC bottomed at $15,500 before embarking on a multi-month rally to $40,000. The current parallel suggests that long-term investors are displaying the same confidence now near $118,000, reinforcing the path to $133,000 across Binance's derivatives platform. Data reveals that retail and institutional traders have maintained persistent short positions over the last 45 days, as evidenced by a negative cumulative volume delta, CVD. Despite that selling effort, Bitcoin has held its ground within the $100,000 $110K corridor until the decisive breakout. This absorption of relentless short pressure highlights market depth and sets up an impending short squeeze scenario. As Bitcoin climbs toward its next resistance levels, incremental liquidations will accelerate buying, further reinforcing the rally. From a technical perspective, the road to $133,000 unfolds through a series of milestones. Retention of $115,000. As support, following the breakout, BTC must hold above the old resistance at $115,000, turning it into a reliable springboard, reclaiming $120,000, a psychological barrier. This round number often attracts algorithmic and discretionary orders, clearing $125,000, a major volume node from the June 2024 consolidation. Clearing this level opens space up to the cup and handle projection near $133,000, breaking $133,000. Once above this threshold, historical volume profiles suggest minimal supply overhead until $145,000, offering substantial room for upside. Momentum funds and trend following strategies often accelerate moves once key levels are taken. In this context, surpassing $120,000 could trigger a cascade of entry signals, rapidly pushing price toward $133,000 and beyond. Amid this confluence of technical and fundamental factors, Marcus Thielen of 10x Research quantified the probability of continued upside. His models show that since June 29th, BTC's trend pattern underwent a structural reversal, boosting the odds of persistent gains through a persistent 2025. Thielen assigns a 60% probability that Bitcoin will appreciate by around 20% in the next 2 months, placing the target squarely at $133,000. Thielen highlights the twin levers of moderate CPI data and institutional momentum unleashed by regulatory clarity as the primary drivers. When macro conditions and trend fidelity align, historical patterns suggest returns in the high teens to low 20s, percentage range consistent with the $133,000 target from the current $109K area. Bitcoin's ascent from $100,000 in early May to $118,000 in early July has been a methodical climb. It's fueled by strategic accumulation, derivatives market dynamics, and surging institutional flows. With sentiment metrics confirming renewed greed, technical patterns breaking key downtrends and completing cup and handle formations, macro catalysts aligned around dovish Fed expectations, and favorable legislation, on-chain data showcasing long-term holder confidence, and expert probability models favoring further upside. The case for $133,000 is stronger than ever, as Bitcoin absorbs every attempt to sell it down. Short squeezes intensify, and momentum algorithms march higher, setting the stage for an explosive push toward new all-time highs. Breaks of $120,000 will be pivotal. But failure of that level to hold is increasingly unlikely given the balance of supply and demand. In the coming weeks, watch for BTC to retest $115,000 as support, clear $120,000, and accelerate through $125,000. Once that sequence is confirmed, the momentum will take Bitcoin toward $133,000, validating the bullish thesis and delivering a defining chapter in this historic bull run. Bitcoin's journey to $133K is no longer a distant hope. It's a probabilistic outcome in motion.